In 2015, Monster entered into a strategic partnership with the Coca-Cola Company. As part of the deal, Coca-Cola acquired 16.7% stake in Monster, and Monster acquired Coca-Cola's energy drink brands. But what is even more important, they could use Coca-Cola's distribution network, and that opened the world of opportunities. This collaboration allowed the rapid growth of Monster. If you were to invest $1,000 into this company 10 years ago, you could buy around 11,111 shares. And now they would be worth something close to $656,104. That is a gain of 65,510% in 10 years. I really don't know what to say. Or maybe I know. I wonder how many investors that bought this stock 10 years ago did not sell it. What conviction do you have to not sell when your investment is up by 100%, 200%, 500%, 1000%? Can you really keep your emotions out of an investment that is 10,000% up? How many times would you have to talk yourself out of selling during this period? I think it just shows that in certain situations in investing, psychology becomes the most important factor. Individual insiders, that is an X, 0.4% of the company is owned by individual insiders, and we would like to see this number over 2%. So unfortunately, the management does not have too much skin in the game. And are individual insiders buying? That is an X. In the last year, we see only sale transactions. And do super investors own this company? That is a check with one super investor, and it is Lee Ainsley. And is he buying right now? That is an X. He sold over 47,000 shares in the last quarter, which is a reduction of his position by 88.8%. That is not very encouraging, but following others blindly is probably not the best strategy, because we always have to know why we own a certain company. We have to understand it, because when the price goes down by, let's say, 30%, then we have to know what to do. Should we sell and cut our losses, or is it a great opportunity to buy? So let's try to understand Monster. Return on invested capital, that is a check at 25% 10-year median returns. And we want to see this number higher than 10%, so such a return is really, really great. And what do we know about net profit margin? It is a check at 22.6%, and the industry average is 13.7%. So Monster has some impressive pricing power over most of its competitors. So far, so good. And if you would like to know which company of all the companies we analyzed on this channel has the best margins, or which has the highest dividend yield, then you can find all of those informations and much more in our stock ranking. This ranking is updated every month, so you not only get the data, but also you get up-to-date prices to help you find the best bargains on the stock market. So if that sounds interesting, then head over to our Patreon page to find all the details. The link is in the description. And now let's take a look at share buyback. It is an X with extra 2.5% of shares created in the last 10 years. But to be fair, since 2016, the number of shares is down by 11.2%. So since their partnership with Coca-Cola, they also changed their share buyback policy. And Coca-Cola bought 16.7% of the company, which by now is 19.6%. And what do we know about the debt? It is a check. They have no debt. That is very nice indeed, because as we know, it is rather hard to go bankrupt without any debt. Revenue growth. That is a check at 11.8% 10-year compound annual growth rate. And we would like to see this number higher than 10%, so that is a very nice growth. And how is the free cash flow growth looking? That is a check at 11.1% in the last 10 years. So both of them are pretty similar. And earnings per share growth, that is a check as well at 13.7% in the last 10 years. And just as with other growth metrics, we would like to see it higher than 10%. So all in all, Monster is a fast-growing company. And what is maybe even more important is the fact that it is a pretty stable growth. If we look at the revenue, it is growing every single year in the last 10 years. If we have a rather fast-growing company, we should not really expect any dividends, because the company needs cash to support its growth. And that is also the case with Monster. This company is still focused on growth and share buybacks, and so it does not pay any dividends currently. Monster price to earnings ratio is 38.6. That is very high. Such a big number suggests that this company is expensive. But let's value Monster using a discounted cash flow formula. And to do that, we will have to estimate its growth for the next 10 years. And because predicting the future is not the easiest thing in the world, we will make 3 scenarios of this growth. So, in the low scenario, we will estimate a growth of 5% for the first 5 years and then 4%. In the medium, 13% and then 10%. And in the high scenario, 16% and then 13% growth. So the low scenario predicts that Monster will grow at a similar rate to the estimated annual growth rate for the energy and sport drinks market, which is 5.1%. Medium scenario is closer to the actual past results, and the high one is predicting that they will actually grow a bit faster than they did in the last 10 years. So, with such estimates, the intrinsic value in the low scenario is $21, in the medium $34, and in the high scenario $43. But we have to also apply a margin of safety to those prices. I always use a 30% one. And with such a margin, we get in the low scenario $14, in the medium $24, and in the high one $30. And the current price is around $57. So it is all in the red. We have a high PE ratio and also a high valuation with discounted cash flow formula. Monster is a really impressive company that is making the most of its close relationship with Coca-Cola. It has great return on invested capital, high margins and no debt. It is also growing at a steady but impressive rate. But such results usually do not go unnoticed by the market, and so it is expensive. This company may have a very bright future, but its valuation unfortunately reflects this belief in a very big way. If you found this video interesting, you may want to check out my analysis of its closest partner, Coca-Cola. Thank you so much for watching and see you in the next one.